Hello, welcome to the European Open briefing for Monday, April the 23rd. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be taking a look at the latest developments in the currency markets today. So the US dollar is extending those gains from last week. It is now approaching the 108 yen level. It's being boosted by rising US treasury yields. So that latest spike in treasury yields comes amid a surge in oil prices, which is lifting inflation expectations. And also we are seeing broad risk sentiment, and that's pressuring gold prices, which have slipped towards two-week lows. The euro remains fairly subdued. It actually fell to two-week lows. This comes ahead of an ECB policy meeting on Thursday, and commodity currencies are also struggling. The Aussie and the Kiwi, as well as the Loonie, are both down against the US dollar. Oil prices have steadied, though they did take a bit of a hit on Friday from comments by US President Donald Trump. So let's get started with the US dollar. We can see both dollar index and dollar yen extending those gains. That sharp recovery that started last Tuesday. Dollar yen is at a 2-month high of 107.89. Dollar index is trading around 2-week highs, approaching the 90.40 level. So US Treasury yields spiked to the highest since January 2014, reaching 2.981%. So the 3% level is now within reach, and that potentially, if it does cross the 3% barrier, that could potentially trigger another turmoil in global equity markets as well as in Forex markets. For now, though, we're not seeing much turmoil for the time being. So as I said, those higher treasury yields are on the back of rising oil prices, which are boosting expectations that inflation will rise in the future. Also, recent data out of the US has been fairly solid, and we had a number of Fed speakers last week, all of them supporting the case for further gradual rate increases. So all of that has been very positive for the greenback over the past week. And looking now at gold prices, we can see that negative correlation with US 10-year treasury yields. Oil prices did find support, though, on Friday just above the $1,331 level, though that was a near 2-week low. We can see US treasury yields coming close to reaching the 3% level. And we are, apart from the risk-on sentiment, we do have geopolitical risks also subsiding. We have a summit between North and South Korean leaders on Friday. That would be the first since 2007, and all of this comes ahead of a meeting between President Trump and Kim Jong-un at some point either in May or June. Also, we're seeing reports that U.S. Treasury Secretary Steven Mnuchin may travel to China in order to hold talks, in order to ease concerns about possible trade war, to start making some progress on that front. So all of that is also weighing on gold prices at the moment. And in European currencies, we can see the euro and the pound sort of struggling against the US dollar. The euro hit a 2-week low of 1.2248 on Friday, despite the fact that Mario Draghi wasn't quite as dovish in his remarks he made on Friday. He said that there's the confidence in inflation outlook has increased, but we didn't see much of reaction in Forex markets to those remarks, and the euro is currently still struggling around 1.2280 levels. We just had the flash PMIs out of France and Germany. All of them beat expectations, but there wasn't much of a reaction to that. Markets are waiting for the euro-wide flash PMIs, which are due very shortly. The pound, though, has managed to steady somewhat. We can see those big losses last week, which came after those disappointing inflation and retail sales numbers, as well as comments by Mark Carney, Bank of England governor, who suggested that a rate increase at the May policy meeting was not a done deal given the mixed data recently. The main focus for sterling this week will be first quarter GDP numbers on Friday. For the time being, sterling is steady around the $1.40 level. And a quick look at commodity-linked currencies. We can see the Aussie and the Kiwi and the Loonie, all of them trading lower against the US dollar. The Aussie touched the 2-week low of 0.7649. Last week it was weighed by disappointing employment numbers. Also eyes will be on the quarterly inflation numbers for the first quarter on Tuesday at 1:30 GMT. If that also comes in weaker than expected, we could see further sharp losses for the Australian dollar. The Kiwi is one of the worst performers over the past week. It tumbled to 4-week low of 0.7188 following soft inflation data, and those declines were exacerbated, of course, by the stronger US dollar. The Canadian dollar also not doing so well, despite the fact that oil prices are trading at 3-year highs. On Friday, we had weaker than expected inflation numbers and mixed retail sales figures, plus some comments from Bank of Canada Governor Stephen Poloz, who said that the bank would be comfortable with inflation rising about 2% for much of 2018. The Loonie hit a 2-week low 1.2777 a short while ago. And if we now look at oil prices, we can see they have managed to steady. On Friday, they had reached a fresh 3-year high before falling on a tweet by President Trump, who said that OPEC is keeping prices artificially high and this will not be accepted. We also saw another increase in the US oil rig count, which rose to 3-year highs last week. That signals further increases in US output, but for now WTI crude has steadied just about the $68 a barrel level, and overall the outlook for oil prices remains fairly bullish. And a quick look at today's economic calendar, we can see we had some Japanese manufacturing PMI rising from the prior month in April. French and German PMIs were also positive in April, possibly suggesting that the slowdown was limited to just the first quarter of the year. We've got the Euro area numbers coming up shortly, as well as the US market manufacturing PMI and some housing data, and another speech by Bank of Canada Governor Stephen Poloz. That's it from me. Thank you very much for watching, and have a great day.